Who we got? You? Aussie? Oh man. Okay. Good day, mate.
G'day, mate. How you doing?
All right. Lessons learned in 2023 and what we doing moving forward 2024. What we at on time?
So we're doing good. We're doing good, actually.
Okay,
Yeah,
all right.
you're gonna get to them.
Okay.
So I think the main lessons I got in 23, I'll actually credit Chris Rood for crystallizing it. Chris Rood spoke a lot about you got to focus on there's fast money, medium money, and slow money, right? And I think that's really important. The whole idea behind that is that like slow money is rentals, right? It's wealth building. It's it's long-term wealth accumulation, but it pays you slow. Doesn't do much, right? Fast money is wholesaling, a really quick flip. A W-2 job is fast money, right? You work and you get paid the next week or 2 weeks. You're getting paid, quickly. Medium term money is maybe a large flip. Flip could go either way, but like a large flip, a land development, something maybe you're buying subject to and selling on bond for diva ballooning 3 years. So just that concept. And when he spoke about that, I realized like I'd gone on a bit of a rip on short-term, slow money, sorry. So, I, in 2022, I bought a lot of BRRRRs. I did 19 BRRRRs over about 15 months, which is slow for sterling. So I did a lot of BRRRRs, and they're really good assets. Like I love those assets, but it's slow money, right? Like I'm not making much from that, particularly when you factor in the insurance that everyone's spoken about. Like some of those turn negative, some of those are positive, so they're slightly negative, and they're great assets. They're paying down, like I love them, but they're not paying me now. So, also wholesale. So I do a bit of wholesale. Wholesaling is fast money. So just listening to Chris crystallize that made me realize that like I don't need the slow money right now. Right, I built a nice little portfolio. Like I have shares in my other company home, so I actually got quite a lot of slow money. So I'm like, I need to go the quick money. So that's really my biggest lesson, just crystallizing that. It came up through our meetup. Like I know you were hearing Emil, like Sterling, talk about also having a W-2 and these people like getting this fast money as well. So I think that was really the biggest lesson, and I think really Chris crystallized that for me. I also think I did learn a lesson that like property is pretty resilient, right? It's funny because the vibe is it's a little bit negative from tonight, right? Like because it's tough right now, but also like on the long-term asset point of view, like property prices didn't really go down. Like, do you know how fast the interest rates went up? Like historically, the speed of which interest rate went up is crazy, right? And yes, it tanked transactions, which I know most people in this room, that hurts, right? Transactions is hurting realtors, mortgage providers, like everyone, right? So yes, the market, I think real estate's in a recession from a transaction point of view, but the assets themselves are pretty damn strong. Even the multifamilies, right? Like Sterling, even like there's a lot of pain in commercial. There's a lot of pain because it's bridge debt, and people are going to get hurt because of the debt, but the asset's a really good asset, right? So I think my lesson is real estate's resilient. And I think that's a positive thing. I'm actually like maybe talk a little bit about 24 in terms of like I'm actually aggressive. Like in hearing a lot of the flippers talk about not like pulling back, that makes me get excited because like I want to buy everything. Because like or Warren Buffett, when people are scared, you should be greedy. When people are greedy, you should be scared. So like I'm low-key excited about what's coming, because real estate is never perfect. Particularly a flipper, if a flipper's in a house, I'm not much of a flipper, although I bought my first flip. So it sounds funny, right? All these flippers are out here bleeding, and I'm like, I'm gonna try it. But I like to be kind of cyclical, to be honest with you. It's never a good time, like because when it's been really good to sell deals the last, like not now, but like historically the couple of years before, like selling deal, how many offers were you all getting on your properties, right? Like they're flying off above, and that's awesome. But what was it like to buy them? It was hard. It was tough. Like you couldn't buy them, right? So now we've flipped. Yeah, it's hard to sell for sure, but it's much easier to buy. So, you never, it's never going to be easy to buy and a great time to sell. Like it just is never going to exist. So we need to adjust. So, for me, like I'm focused next year. I'm feeling actually more aggressive just because of what's going on. My focus really is just fast money, doing a lot of wholesaling because I wholesale a bunch. So I want to lean into that more. I'm really focusing on the disposition side of wholesaling, right? Selling the deals because it is harder to sell, right? And I think of wholesaling as a two-sided marketplace, right? So my background is tech. I had a tech company that was a two-sided marketplace. And a two-sided marketplace is a really normal business model. There's you can read a lot about it, right? And that's just a two-sided marketplace is connecting two different people and making life easier. So, for wholesaling, you got a seller who has a problem property and they need a solution. They need a fast sale, an easy sale. They need to not worry about the fact there's a hole in the roof. You know what I mean? Like they need, that's what they need, right? So your job is to make that really easy. And I think most wholesalers get that. But the flip side of that two-sided marketplace is the buyers are the other side, right? The buyers also need a frictionless service, right? For the flippers particularly, they need deals on a platter, right? They don't want to negotiate, call. They want a deal. They want to make it easy. They want a nice closing. Like they want service and better do it, So I think that's the other side. And the two-sided marketplaces are never in balance, right? And sometimes other ones are more important. And it has been a selling season. If you got a contract 2 years ago, you're selling that thing, right? Like it's easy to move. Now it's reversed. It's harder to sell because, there's less buyers. The buyer pool is smaller. So for me, I'm really want to lean into that. I'm just focusing more on dispositions. Like I'm hiring a disposition person for my company because I'd historically done it myself. But I'm hiring someone so that we can focus more on hearing what our buyers need, understanding their pain points, understanding what they're after, making sure that we can find the deals they want, sell them, and why it's easy to buy and just make sure we're getting the right prices. So I'm really digging down into that. I'm not so focused on the slow money right now. I do long term. Rentals are my favorite thing. They're my favorite thing, but I don't need more now, right? I did a whole run. That's cool. I'll let that settle and I'll get aggressive again. But that's really my focus. And definitely I think the other thing I'm focusing on is the network, right? People in this room, cooperation over competition, right? I did a lot of JVs this year. So I really found a lot of people would come to me to move the deals. And that's great. A lot of working with Courtney, we've done a lot of deals together too that we bought, because she's great at, creative financing as you hear, and I'm not, but I'm good at marketing and finding leads and systems. So, working with her. I just think that the relationships are important. I want to build more of the relationships, build out disposition, and I'm aggressive, actually. Yeah.
Good stuff.
Cool.
So 2024 dispositions, 2023 lessons learned.
Yep. So the lessons is the fast money, slow money. So 2024 focusing on dispositions, focusing on fast money, focusing on more relationships. I'm gonna do a couple of flips, and I don't want to be a flipper, to be honest with you. It's not. If you've heard me speak, I normally say I'm never gonna flip because my skill is sales and marketing, but I sort of want to flip for a couple of reasons. Firstly, I think it'll make me a better wholesaler. Right, me doing a lot of BRRRRs, I think made me a much better wholesaler because I actually have properties, I understand them, I have rentals, it made me better. But I'm not much of a flipper, right? So I want to flip so that I understand flippers more. I go deeper into the rehab process. So I think it'll make me a better wholesaler. Also, I just want extra exit strategies because you hear some of the flippers are scared right now, right? If they're scared, if I think there's a deal, I'll take that risk, right? Because historically, if it needs a flip, I'll take a really low assignment fee. I'll sell a deal, I'll get 2K, right? That I've put a lot of work into, a lot of marketing into. I'll just sell it to move it because I'm not a flipper. But hey, if I'm getting a 2K offer, if I'm gonna make 2K and I believe in the deal, I'm just gonna take it down myself, And that's I just want to build that element too.
Yeah.
So we have time. We've done good on the time. I was really just firstly, this format was a bit ambitious. And I really appreciate the speakers that came. We got some really good speakers to come and just spend a short amount of time. So it was an ambitious agenda, and we're trying to be really tempted not to ask too many questions.
It was hard. It was hard.
But we got time for you, Emil. So
Yeah.
I'm gonna turn the mic to you and